Good morning, my King family. How are you today? All right, so I woke up, I look at gold, it's down $40. Let's get the exact price as of 11:22 Eastern Standard Time. And we've got a price of 1768, down $41. Now, if you notice, it all went down between 9:30 and 10, the normal time the price fixing comes in. So every morning about 9:30 to 10, I've told you this in several videos, they dump it. It's just what they do. They're dumping their gold of the fake derivatives. This is not real. Nobody's selling their gold. Don't get nervous. This is the huge buying opportunity. Howard, what the hell are you talking about? Gold's going down. Nobody wants it. The market's saying it's down. What are you talking about? That would be like this going on sale for $10 that normally sells for $50. What are you talking about? This is a $50 bottle. There's no reason it's going down. Well, let's talk about it. So I'm looking in my phone about why are prices down. So I'm going to read it to you, make it easier. Gold dips as rate hike bets. Strong dollar trumps safe haven bids. Gold fell on Tuesday, pressured by rate hike expectations and a stronger dollar versus the shitty euro and the shitty yen. Let's not forget that. But growing recession fears kept safe haven bullion pinned near the key support level of whatever. Next story, gold dips as stronger dollar rate hikes trounce growth concerns. Next story, gold inches down as U.S. bond yields bounce back. Gold slips as interest rate expectations sap appeal. So it's the same. Gold or teeter, well, this is an early one. Gold or teeters above 1800 as dollar strengths away. So what's the bullshit that they're giving us? Well, I'd rather be in a 1 or 2% interest rate and the rates are going up as they ruin the economy. So therefore, nobody's selling gold in the first place. So let's understand that. You are not leaving gold for US dollars. What have I been saying? What have I been doing? What do I have all my friends doing and my family here? We're all selling dollars to get into gold because the value of the dollar is going to drop to zero. The value of the yen is 137. Let's take a look at some FX. So if we look at what's going on in the FX market today, FX. So let's look at FX, US dollar to the ruble. To the Russian ruble. I hate when it does that. You do it and then it kicks back to the original. It says 64, 62, but that can't be right. Let's say it is. So jump from 52 to 64, huh? Okay. Let's look at it to the Sri Lanka rupee. 358. It buys 358. That's a broke country that is gone. That's what you're going to get, 358. So let's go to Japan. And the bankrupt yen, let's see where that's at. This is just We can see this to see where that is. That's at 135 today. I'm really surprised that the ruble went that far down. But so you can see, who are we strengthening against? A little bit against the ruble. We went from 52 to 62, which I don't believe. The yen still 135. Let's check the euro. We'll do that last check. So the American dollar is getting stronger, they say. Well, it's 98 cents, so we got to do it the other way. Fortunately, there's no easy way to switch it. It's like $1.02. So I'd like to know what the U.S. dollar. See, when they say it's strengthened, it's $1.02. It was $1.04. So when they say the U.S. dollar strengthened, they're saying against another currency that's being printed and inflated. The ruble doesn't make sense because that's a better currency. So I don't know why that would have went from 54 to 62. But they're afraid of the rate hikes. Okay, you can only raise rates a little bit more. And so what they're thinking is, okay, in 1980, Volcker raised rates to 20%. And that stopped inflation because people put their money back in the bank. And then the bank could destroy the money supply. And then the money supply would go down. And inflation is an increase in the money supply. So if we're decreasing the money supply, that kind of stops inflation. Okay, but they're not going to go to 20% with the interest rates. They're at 1.5. They're going to go to 2. Everything they say there is bullshit. The dollar's stronger. The 10-year bond's stronger. So would I rather have gold that's going to go up, or do I want to be oh shit, the internet. Okay, I guess I'm fine. So do I want to hold the dollar or hold the gold? Well, the dollar's still being inflated. And if you raise interest rates from 1.5 to 2 and the inflation rate's 20, you still got heavy inflation. You're still losing the value of the dollar. It's still going down. So the dollar's strengthening against the yen and against the euro. It's going to make me believe what? I'm going to sell my gold and buy a weak dollar, but it's stronger than the worst currencies out there, the yen and the euro. And therefore, what does that mean? The dollar's not strengthening. You printed $9 trillion. You still printed $9 trillion out there. It hasn't strengthened at all. It's against other currencies. Well, okay, so I'm half tempted to just liquidate my stock IRA account that's got about 60,000 in it and go buy gold at 1765 or whatever the hell it is as the biggest sale of the century. See, what they're doing is, and I'll go into a poker story for you to make it more understandable. They're trying to scare people not to buy gold. Why would they do that, Howard? Because we got a sick freaking government that wants us to buy electric cars and raise oil prices on us and makes us get COVID vaccine shots if we need it or not. They're trying to make us do a lot of stuff we don't want to do. So they don't want us to go into gold. So what's the best way to keep somebody out of gold is to basically look at the price drop. And then we'll blame it on the dollar is stronger, the interest rates are going up. Yeah. Good morning, Nick. I hope all is well. Yes, I'm fine. I hope you had a nice 4th. You remind me of the guy in the movie Big Short where everyone thought he was crazy for shorting the house. Well, that's exactly what I'm trying to explain. What's happening here is they don't want you to buy gold because you'll be independent. You won't be controlled by the government, right? Again, JP Morgan, who is getting out, Now, what is my opinion is the reality of today is JP Morgan selling out of their position. And they have trillions of bad derivatives that they're going to lose $1 trillion with. And they know this. That's why they're getting out of the derivative business. But they have all this paper money. And they want to they have all these paper contracts that they owe money on if they come through. So they're getting rid of them. So there's this massive dump by JP Morgan of derivatives driving the price down because they're getting out. If you've seen, to go, Nick, to a different movie, Margin Call, which was probably one of the stupidest movies. I just watched it. And it's very irritating to watch because it shows you that these people are freaking morons. Okay, Clinton signs in the law that you've got to loan money to people that can't afford to pay back. And therefore, you're going to loan money to bad risk, but we'll cover you. So if you lose money on these people, which of course you will, then we're going to make you whole. So, well, the problem with Margin Call, real quickly. So there's the one kid always asking what everybody makes. That's not realistic. That doesn't happen in the world. You're telling me that the main character, what's his name? Jeremy Irons, is charge of the place, doesn't understand anything about finance or economics or loans, doesn't get that because Clinton allowed all these bad debts to go in, we're going to do all these mortgage-backed securities, which involve all this bad debt. And you're telling me he doesn't understand that 5 years ago? I know about it. It's like now telling you to buy gold because of the crash that's about to happen. I knew about it a year ago. I was telling you about it a year ago. Listen to my videos. I told you to buy gold. Nick's been buying silver and burrow cards. We're getting out of cash because we know what's going to happen. I don't need to do this at the final minute. I can see what's going to happen because I'm educated in it and I know it. So you're telling me some guy, Jeremy Irons, who runs this billion-dollar plant, all these idiots there don't have a freaking clue that there's going to be bad debts because when the interest rates that are variable go up in the money, people can't afford them and they're going to sell their houses. And I know girls that bought like 5 houses, can't afford 5 houses. Well, we're going to buy them and sell them. What are you talking about? As the rate went up, they couldn't afford them and they sold them, but nobody was there to buy them, which is what's happening now. Nobody's there to buy them and the price dropped. And that's what happens on Margin Call. And they get stuck with all these useless mortgage-backed security loans. So what that is they're taking the actual payment, the interest rates. So let's say you're getting 8%. Well, you can't get 8% because the Fed's lowered interest rates to 0. So if you put your money in the savings account, you get 0, which is another reason there's no there. Who's okay, my friend. So you don't put your money. Where's your money? Do you have any money in the bank for savings because the interest rate's 0? No. So you pull all your money out, and then what do? You buy baseball cards, you buy gold and silver, you buy stocks, maybe you buy a house, but you fuck the housing market because it's 40. It's up so high because of the low interest rates. You can't buy a house now. If you bought one before and you're in it, you're okay. But if you bought it late, it's going to go down. Stock market, as the cost for the Canadian club goes to $60, but the market says I can only sell it for $50. I have to either get out of business or lay off a bunch of people, but I can't stay in business selling this at $50 if my costs are $60. I can only sell it for $50 because that's all the market will allow. And that's what's happening. So with that said, today in gold, we know what's going to happen. We know gold's going through the roof. We know the US dollar is going out. It's just a matter of time. What's happening today is JP Morgan getting out of the derivative because they know they're going to get killed and lose trillions of dollars with these stupid derivatives that aren't real, that are just paper. So they're getting out. And I've heard that. One of my, Alistair, the other guy, has basically said that. He said they're going out. So the getting out of the business means it's about to go through the roof. So this is the last ditch effort because of the quarter ending bullshit. They're trying to get out of all their derivatives, which are like options, which are very, very risky. But for some reason, they never lose money with them. It's amazing. So that's what's happening today. The excuses used are, well, the dollar's stronger. So why would I want gold? I don't want, the dollar's getting stronger. Is inflation going away? Did gas go down to $2.95? No. I filled up yesterday at $4.89. I filled up a couple days earlier because I went up north, $4.81. It's not going down. He's not letting them produce. He wants us to use electric vehicles, which are more expensive, and go find a plug. If you're driving from, Nick, you're in New Jersey. Let's say you drove to Detroit, good luck finding a gas station on the Pennsylvania Turnpike. Where are you going to find an electric gas station? You're going to run out of juice? Yeah, I really want an electric car. And how expensive is that going to be, right? Oh, electricity's not a lot. Yeah, well, when everybody uses it and all of a sudden they need more, boom. Now it costs you $100 to fill your electricity in the car, but they're not telling you that, and they're going to tax you on it, which is like the cell phone. Used to be no tax. All of a sudden it came out. Everybody started buying it. All of a sudden there's a tax on it. So don't kid yourself. It'll be very expensive. So interest rates, the Fed's going to raise interest rates from 1% to what, 20? But they don't even think inflation's 20. They think inflation's 8. Okay, you're going to go to 8%, which you'll never do, and it's impossible to do because you'll break the economy, because the stock market will crash to zero, the housing market will crash because nobody can afford it. Everybody's got debt, except for me, Nick, and a few other people. We understand that. So we got very little. I'm killing my credit cards. That basically, I got $5,000 because of the move between the hotel and buying new furniture, and I got about $7,000 on it for buying gold because I wanted to get gold before it went through the roof. And I can see I still have a little bit of time. Today I'd be running out buying gold if I had the extra money, but I've already spent I got 40 ounces of gold. I would have, but I don't care. I don't look at it like I lost. I look at it like, no, I know what's going on. It's going to go. It's JP Morgan selling their shorts, and the way the derivative paper market works, there's no buyers because nobody buys it. They buy real gold, right? I went out and bought coins, or I bought in 95. You buy coins. The Indians are buying necklaces because, as I explained the other day, when they get married, they have to give gold as a wedding present, or they can't get married to the family. So if I'm going to marry some girl, I got to get her a gold necklace, and I got to get her parents something gold, and they're going to buy me something gold. So the demand for gold is huge in India right now. We know the Russians have 13,000 tons, buying as much as they can. We know the Chinese are preparing to invade Taiwan and are going to get sanctioned by the U.S. because, God forbid, the Biden actually uses our military to defend. So China's preparing for the sanctions. So what are they doing? They're buying gold. China's got their own problems with inflation and the housing market that's crashed, which is coming here. Their whole Evergrande collapsed. They're building houses with nobody in it, and it collapsed. The buildings literally fell. So the whole housing market in China is crashing. A lot of China people had houses here. A lot of U.S. had China houses. They need money. They're going to sell to get money to pay for the abortion that's happening in China. So they're buying gold as much as they can also. So India's buying gold. Russia, we know. China, we know. A lot of the European central banks are buying gold. Who's selling? Anybody? Nobody sells. So in a market, as I've tried to explain, if people are selling, it gives you the prices are the information, right? Let's go to football. So if we talk about Michigan game, I don't know. I was in Amsterdam at the time, but the spread, let's say Georgia was a 7-point favorite. Now people are betting Michigan because they like Michigan. There's a lot of Michigan people, and the spread went down to 5. That's the market acting. Money's going. You can see money's going on Michigan. The spread's dropped to 5. That's the money going on Michigan. If Georgia went to 9, that's the money going. So you can follow the money and see what's happening. In gold, you can't. I meant to ask, when a couple hundred from the Stanley Cup just buy not silver or fractional gold. Don't really have enough to afford full ounce at the moment. You don't need to buy a full ounce of gold, Nick. That's my point. You can buy a tenth of an ounce of gold, it's like $250, and a quarter ounce is $575. As long as you're buying the silver, the key thing to understand, everybody, Nick and my whole family, what you understand is you're getting out of the dollar, right? You can see I just gave you Sri Lanka was 350 to the dollar because they are out. They are gone. They can't afford. You can't use your money there. You can't go to the bank there, and you can't get gas there. They've now shut that. Please look at Sri Lanka. They are broke. They've printed too much. Nobody will give them money. They are broke. They're in debt. They are broke. The yen, the Japanese, is now 136 to 1. They are going Sri Lanka's way. They are going to be broke. Nobody will lend them money because nobody wants yen. That's what ends up happening. You have this huge debt. You borrow money to pay it. Well, let's say nobody will give you money. Now, how do you pay the debt? Well, in Sri Lanka's case, they tried printing it and they printed it into oblivion. Now it's not worth anything. What's going to happen in Japan? The same thing. They have huge debt. Their interest rates are 0. They won't raise their rates. They're out of their freaking minds. And it's 135 to 1 against an inflated US dollar. That's crap. So they're 135 against us. I mean, it's ridiculous. So because they're 135, they're going to 150, they're going to 200, they're going to 300. Nobody's going to loan Japan money. Why would you loan Japan money? What are they going to pay you in? Yen? Now, unless they came up with gold to pay me, I'm not taking yen. That's the point. They're going to go out. When they go out, as they would say, Katie, bar the door. It's going to be just crushed. Nobody gives a fuck that the U.S. interest rates are going to go from 1.5 to 2 because the Fed's going to get aggressive raising it. If the Fed was going to get aggressive, if I was the Fed chairman, I'd raise it 5 points. It would be 10 by now. And then I would let it go to 0. The lowest I would ever do a Fed's fund is 3%. That's what you should leave it at. That's what the market is. Minnesota -3 over Chicago. That's the line. That's what I'm keeping it at. I'm not going to go to 3.5 or 2.5. That's what you do. But by keeping it at 0, you're making money cheaper. And when they print the money, it's worth less and less and less. You can't all of a sudden raise interest rates. Now, why the hell would you sell gold to buy dollars? What have I talked about for the last year? Get out of your dollars because they're being devalued. Buy gold. So what they're trying to tell us in the article, and I'll reread it because I know I have some new guests. Welcome to Teaserking World. Where is it? Go this way. I see the market down 700 today. How it's only at 30,000 is beyond me. Oh, where is it? Anyway, what they're saying is Gold is down because of the stronger dollar and the higher interest rates, which is all bullshit. Again, the dollar's not strong. The dollar hasn't gotten strong. It's stronger than the yen and the euro. That's what you're comparing it to. So it's still not strong. It's like Michigan beating the Citadel. Well, look how strong Michigan is. They beat the Citadel. Well, let me know when Michigan beats Alabama or Georgia. Then I'll listen. Right now, they beat the Citadel, and then they got Rice, and they beat Rice. So Michigan's stronger. No, they didn't. Who'd they play? Against the big boy. You beat Ohio State, then you're stronger. So that's my point. So here, the dollar is not. It's not stronger. It's stronger than the euro and the yen. And that doesn't make it strong because they're very weak. As I said, the yen's 135 going out. It's going out. Watch. You just watch. You don't just. I'm telling you what's going to happen. We'll all watch what's going to happen. Just like I tell you the football games. And that's what's going to happen because they are printing money. See, you can't print and print and print. It devalues it. It makes it worthless. That's what the yen's doing. That's what the euro's doing. And that's what the US is. Because at the end of the day, who wants it? What has Russia and China said about the US dollar? Russia will not accept it because it's worthless. They said it's like a candy wrapper. That was Putin's words on, I don't want the US dollar. You pay me in gold. Well, why gold? Gold, nobody wants gold. Gold's terrible. Gold doesn't give you interest because gold's the only real money in the world. Gold and silver are real money. Paper's paper, and paper's worthless. So you can raise your interest rates, which brings dollars back into the bank. But how many people are running? Okay, you got 50 grand. Are you running it into a CD to get 2%? If it's even that high, okay, after July, maybe it's 2%. Are you running it back in 2% of inflated dollars? So if you put 20 grand in and got 2%, the 20 grand is going to be worth 15 grand because they're inflating. The 2% gives you nothing, and you're going to get taxed on it. Gold goes up. They don't give you a dividend on gold because it's gold. It goes up in value. Now, this abortion today is because of JP Morgan, not because of the market. So this is what I'm teaching you about the market. The market controls it. If JP Morgan dumps a bunch of derivative options and sells them all, of course, the price is going to go down. There's nobody buying because nobody wants to be in derivatives. Me and Nick are sitting there buying ounces of gold and silver and buying the coin because it's the only money out there and it's the only value. That's what you buy. So this is all BS today. This is not real. This is JP Morgan selling out. Do not panic. Do not go, shit. Nobody's selling gold. In fact, everybody's buying it that can. This is a great opportunity to buy it. But you watch. I'll think I'll just run to my coins guy just to get a price. And I guarantee you, he hasn't lowered it much. I bet you it's 1770. I bet you, let's see what it is right now. It's the price of gold at 1151 is, I hate when you go on a page, but you have to refresh it. 1768 down 41. Really? Okay. So that's not a real price. As I've said, even the 1900s is not a real price. So that's and then they mark the premium. So I bet you 1767, 1867. I can probably get the ounce for about 1877 would be my guess. So it's a bargain. I just bought some for 1950. Now the Eagle will probably be 1900 still. Well, why? Wait, gold. Nobody wants gold. The dollar, the interest rates are going up. The dollar's getting stronger. Why is there even a premium on gold if it's at market? There wouldn't be. There'd be at market, just like buying the Canadian club. This would be $50. This is market. You wouldn't mark it up to 60 to say, oh, well, I need a premium on it because whiskey's really not at the right price. See, you need the buyers and the sellers together to create what the real market price is. And you don't have that in gold. You've got this derivative COMEX bullshit price, which is putting it down, but the demand is here. Just the Indians demanding it for all the wedding. It's wedding season. They're buying gold hand over fist because nobody got married last year because of the COVID. So gold's down. They're smiling in India buying it. The Russians are buying it. And the Chinese are buying it. And the U.S. is loving it because they're sitting there going, great, nobody's going to buy gold now. Everybody will stay in the dollar. JP Morgan owns COMEX. They own the Federal Reserve. I am sorry. So when they print dollars, what did I say about Sri Lanka and Japan? Nobody wants them because they're not worth anything. Well, if that happens to the U.S., which it will, but if it happens today, JP Morgan's going to run the Fed and print, and nobody's going to want it. They're all going to run to gold. But when 99% of the population is clueless about gold, what happens? They sit there and nobody get gold. See, look at I'm buying Bitcoin because look at gold. Bitcoin, now that's a real asset. That's what you get is right. Gold is down, so I don't want to own it. Let me take you to a poker. I went poker Sunday night. I knew I was going to lose, and I did, but I played fantastic and lost $75 because I played fantastic. You can lose and play great. I didn't get burned. I only won 2 hands, and it was just a nightmare night, which I knew I had no feeling for it, but I wanted to play. It was the holiday, and it was like the cards sucked. 3-9. It was one of those 3-9, 2-7 nights where, you get nothing. And I got one hand, I got King Jack of Hearts, and the flop came 2 hearts and a king. So I had 4 hearts, pair of kings. I bet, small bet, everybody folded. I mean, that was the way the night went. What am I supposed to do? So I'm talking to a guy about gold and silver, this guy next to me, and I go, so where's your money at? And I got to be careful because I got to realize I'm talking to morons most of the time at the poker world. Oh, I don't have any gold and silver. Where's your money? Oh, it's in crypto. Why? I play stupid and I go, why is it in crypto? It's not an asset. It just dropped. And I love this mentality. So Bitcoin drops down from 60,000 that it never should have been at down now is at 18,000. Why is it going to go back to 60? What's driving it back to 60? I don't know. It just will. What do you mean it will? See, this is what I try to teach. We only bet football games because we have an answer why. If I can't give you a reason, even the baseball I give you, which it's much, much harder, I give you reasons why I'm going to make the bet. We got Verlander on the mound. We got McCullough on the mound. We got the Yankees. We got the Dodgers. We're taking the over in Colorado because they score 100 runs at home. We have reasons why we do things. This is the way professionals work. When I give you football games, why are we betting Georgia? Because they have the best defense in football for the last 50 years, since the 85 Bears. That's how good their defense is. That's why we bet under on Georgia every week. That's the reason. And so when it comes to gold and silver, there is no reason these guys don't get to buy it. Well, it doesn't move. I don't know. I'll buy crypto because they're smart enough apparently either to get out of the dollar or they're doing it because it's a cool thing. It's crypto. It's the money. It's the gold. They do think it's gold, but it's not. Gold's gold. And they'll buy the crypto on the dip because it's going to go back up, but they can't give me a reason. I tell them I think it's a pyramid scheme. I don't buy it. I says, there's no reason for it to go up. If it was a stock and sales jumped and they had a new product, absolutely the stock's going to go up. That's why I'm going to buy the stock. But I'm not going to buy the stock if there's no news that the earnings. I'm going to buy a gold stock, Newmont Mining, because when gold goes up to 20,000 an ounce, all the little gold ounces in the mine that are valued at 1,300 are going to be valued at 20,000. What's that going to do to their earnings? They're going to go through the fucking roof. Why am I buying the gold stock? Because the gold value will go up. But I'm not buying it now because I could and just wait, but because I know a whole stock market's crashing because of the inflation, I don't want to be in the market. I'll hold it in dollars, which I don't want to be in either, but I will buy the gold stock once it's down into the 30, 58 or 60. So once it drops, well, it's probably getting killed today with gold down so much. But that's why I buy it, because I know the price of gold is going to go up. Therefore, all the inventory of gold in the mine goes up. Therefore, the value of the company just zoomed. That's why I'm buying. So I have a reason to buy things. I have a reason to pick football games. And I've made a very fine effort of sharpening my tools to pick football to go. Time of possession's meaningless. However, we're going to bet Army and Navy because they run the ball 99% of the time and have pretty good defenses, and there's less possessions in the game. Therefore, normally those games go under. Although lately, Army and Navy went over. Our Army was really crushing it. So that was kind of weird. But normally a running team with a good defense, you bet under on, which we happen to have this year. So I'm going to digest to that real quick. We're going to lock Clemson almost every week under if we get the same 50-point over-unders, because they have 6 guys in the defensive All-American first 3 teams, and they have no quarterback who is any good. So they're not going to score. They're going to run the ball. They're going to play Army football. They're going to run the ball, and they have this great defense. So they're going to eat the clock. The other team won't score. They'll win every game 10-0. They'll get some 20s in there. That's why. And Clemson's our Georgia this year. And then the question is, will Georgia also, now we have the scheme, the backups played, will they also, and they probably will, be lock unders also. So that's what we have. So back to the crypto, back to the poker game. So they're playing crypto because it's a dip. Why are you buying the dip? Well, I notice when dips happen, they go back up. That's the third person that's told me that. The guys I used to work with at Alabama told me, I says, well, are you going to sell your stocks? No. They'll drop, but they'll come back up. Why will they come back up? We got heavy inflation. They're not going to come back up. Oh, no. You're older, Howard. I'm younger, so I can watch them drop. And then, so they're not denying the drop, but I'll wait till they'll come back up. So at best case, you're at 20,000, your stocks tank. Now you're at 2,000 and you think they're going to go back to 20,000. So in other words, you're not going to make a nickel, but you're going to sweat the 20 to 2 and then watch the 2 go back to 20. Wouldn't it be smarter to get out, watch your 20 stay when it goes down to where it would be 2, then you buy it and then your 20 turns into 40? Wouldn't that be the smart play? No, I don't know what I'm doing. So I'm just going to, I'll just leave it in and it'll drop and then it'll come back. And at the end of the day, I'll be lucky in 40 years if I break even. But if I sold, like you said, I wouldn't have the risk downward. And then I could come back when it starts coming up and make money. That's how you do it. All this, you don't time the market's bullshit. That's by people that don't know how, don't know what they're looking for. Again, I find so many people that don't understand the market. They don't understand economics. They don't understand gold and silver. It's amazing. So at poker, so somebody else butts in. Oh, are you, what do you think, the end of the world? I go, well, do you realize the U.S., I don't know how to talk to this guy. Do you realize the U.S. dollar is not the main currency anymore? Do you understand what that means? Do you understand the yen's 135 going out? Do you understand what that means? Do you understand that the derivatives are run by JP Morgan and they're getting out? So the price is set by JP Morgan is not a real supply demand Michigan Georgia line. It's just one way. We're going to make Alabama minus 14 because we know everybody's going to bet Alabama. That's the kind of line it is. So you're sitting there and you can't really argue with these people. And then you realize that they're clueless. These are the sheep about to go into the chop shop to get killed. And you see, and you know that's what's going to happen. And you just see these people and they're so clueless. But what gets me is they think they actually know what's happening. Oh, the world, the government won't let it happen. And are you kidding me? Are you watching with the government? Are you paying $5 for gas, or are you living on a different planet where it's not $5? Like, what are you talking about? So why is gold and silver down today? Very simple. It's the JP Morgan trying to save their ass from the derivative markets. They didn't understand. They kept selling and selling and selling. And then there'd be another end in England that would buy. And it was a beautiful Ponzi scheme. They are caught. They're caught by the Russians who don't want to play anymore, who have backed their dollar by gold, who are saying, no, it's time for gold to go up. The Indians are buying it. The Chinese are buying it. It's all this little ploy that Putin puts them on sanctions, which is all planned and all bullshit, so their dollars can go. There's something called the BRICS nations. Look it up. China, Russia, India, Saudi Arabia, Brazil, Argentina, and a bunch of other countries who don't want to be with the U.S. anymore. They're just sick of the politics, or they don't like Biden, or they don't like that he put sanctions, and are they going to put them on us? Look at Sri Lanka, look at Japan, and the euro is going to go out. Howard, come on, how can the euro go? It's fucking Europe. What are you, crazy? Well, look at the gas. Russia stopped gas to Germany. They're saying, screw you, you're helping the Ukrainians. Now let's keep in mind, why is there the war? Because Russia wants the oil under Crimea, under Kharkov, and a little bit by Lviv, but mostly Crimea, which is the Black Sea, and Kharkov, which is right on the East Coast. This whole area has billions of gallons of oil under it. That's what this war is about. That's why Putin won't stop. I don't know that he needs the oil. I think he just wants the monopoly. He's pulling a JP Morgan with the derivatives on gold. He's doing it with oil. And he's figuring, first he figured, Ukraine won't care. We'll just come in. Ukraine says, sorry, buddy, we need the oil to survive also. We don't want you here. That'd be like somebody moving into your house. I don't want you here. Get out. I'm not getting out. Get out of my house. You don't live here. That's the war, right? No, I want to be in your house because I heard you got oil in the bedroom, right? Or you got gold in the bedroom. I'm going to look for it. And I'm fighting back on, you're not taking my gold and my oil. That's what the war is. So they want the gold. So they shut off, because Germany's helping the Ukraine, they shut off the oil to Germany. What the hell is going on? So they're printing and printing and printing. Huge debt in Europe. Guess who's next? All I know is I went to enjoy the girls in Amsterdam a couple years ago, and it was $120 to a dollar, the euro. So you had to pay 120 US to get $100. It was $1.20. Let's keep it that way. You had to pay $1.20 to get 1 euro. It's down to $1.02. Is the US dollar stronger? Hardly. We just printed 9 trillion of them. So that means the euro is weaker. So if you just see what's going on, why is the euro? We're printing money to death, but the euro is coming down. No, the euro should be going up because we're printing. We're printing. Everything here is more expensive. The euro should be here, but the euro is down here with us. The only explanation is they're printing it as much as we are, print, print, print to pay their debt. So what you have is huge debt. And that's what's destroying everything. The Japanese are going to print. Sri Lanka printed, can't get a loan on their on their debt. They basically declared bankruptcy. We can't pay you. Okay, you're bankrupt. Japan's next. 135 to 1, and we're heavily inflating our dollar. Shows you how heavily inflated Japan is. Nobody's going to give them money for their debt because they go into debt. Here comes the euro, and then here comes the good old US of A. We're getting so screwed by these idiots running the finances of this country. It's pathetic. So your only protection are real assets, as we talked, the gold, the silver, the baseball cards. If you've owned a house, fine, but you can't buy it now because now interest rates. As this happens, I don't want to. So say you own a house, $1,000. I want to make 110. I want to make 10 grand on the transaction. What interest rate they got to charge it? 10%. Well, wait a minute. The money I'm going to get back in is inflated money. It's not going to be worth the 100. It'll be worth 80. So my interest rate has to go up to get the 110 out. That's why interest rates go up on houses. So as interest rates go up, even though the Fed is at 2, they're at 6. They're going to 10. Well, wait a minute. I'm going to go buy a $400,000 house at 10% interest? Are you? No way. So if I need to sell, I can't get the 4. I got to take 3 or maybe 2. I can afford 2 because interest rates are now 10% because the guy who's selling who's loaning the money needs to get his money out, and he can only get his money out at a higher interest rate. Because if I charge you 2%, with inflation, the 100,000 coming back is going to be worth 70,000 or 60,000. So that's what you have going on. We've explained the stocks. As this price goes up, what happens to Target? Walmart can't sell it. Now it's $60 to buy a $50 item. They stop selling it. They go out of business. They lay off their employees. And what happens to their stock? They didn't meet earnings. They didn't have profits. I don't want to be in their company. They're not making money. GM had to trash 200,000 vehicles because they made them without the chips. And when the chips came in, they weren't compliant to the vehicle. Therefore, they couldn't put a chip in the vehicle. They had to throw out the vehicles. You want to be a stockholder in GM at high interest rates? What do you think they're charging for a car? It'll probably be 6, 7, 8%. They're not going to sell a car. They want to sell a Camry for 30 grand. I wouldn't buy it at 0% interest rate. It ain't worth 30 grand. I paid 24 and it wasn't worth it. So they're going to sell it. Do you want stock in Toyota? They're not going to be able to sell the car. They've raised the price and the interest rate. Who can afford it? You've inflated me. It costs more to buy gas and food. I only have so much money. Okay, the millionaires, the Bill Gates have a lot of money, but you know what? We're going to all laugh at them soon. Give it a year, because what will happen with Bill Gates, he's not smart enough to put money in gold and silver. He's buying land, but land's not an asset. It's what you do with the land. If you put Caesar's Palace on the land has a value. If it's just the desert, there's no value to the land. Only if you think you're going to put a hotel next to Caesar's Palace, which I thought of when I was an 8-year-old kid and we went to Caesar's in the 60s. And I said, geez, there's nothing next to it. We should buy the land next to it, because they're going to probably build, if Caesar's is here, it'd probably be a good place to put another casino in the Mirage Group. How much money would I make on that land? Now, that's because of the IFCOM. But my point is, that's what you have. So stocks are going to drop. So where do I put my money? So I'm Bill Gates. I got land, but unless it's developed, it's pretty much worthless. My houses are going down in value. My stocks are going to get crushed. The Warren Buffetts are going to get crushed because his stocks, he's not smart enough to buy gold or silver. Now, they won't buy Bitcoin, which is good, but they won't buy gold and silver because, oh, look at gold at 1,700. Aren't they? Don't they know about freaking JP Morgan derivatives? Really? So nobody knows about JP Morgan except for me, you, and a couple of guys in England are the only ones that know the paper casino currencies of JP Morgan derivatives holding the price down, Alabama minus 14 when they should be 7. But we're going to raise the line, not by market, not by betting both sides, but by we think everybody will bet Alabama, and therefore we're going to raise the line. It's sort of like at poker. I asked seriously this question, and I'm probably a professional player, very close to it. But I'd rather handicap football professionally. So I know what a straddle is. I'm not sure why you do it on the button. The button is the last to act. So I'm playing a $1-2 game, which means the guy next to the button bets $1, has $1 out there, and the guy, the ante, and then the guy next to him has 2. And the cards get dealt. The first card is next to the button, so it gets dealt around, and the button gets the card last, is last to act. That's the advantage. So, in other words, so the blinds don't bet first. The guy next to the blinds bets first. It goes around the table. Then it gets to the button. Then it gets to the $1 guy. And then it gets to the $2 guys, the last guy to bet. The $5 straddle makes the $1 guy act first. And I'm going, you know me, I go, why? What's the point? Why? So I can't figure it out because you already have the advantage. You act last. I'm not worried about the small blind and big blind are only coming in with hands because they're out of position, which means they have to act first. Remember, the button acts last. So the blind's going to act first, and then it's going to go around. But when you make it $5 at a 1-2 table, go to the $5 table if you want action. Why are you at a 1-2 table making a $5 straddle? Go to the 2-5 table and bless your heart. Then you'll get $5 every hand. I don't understand it. So I says, why do you do that? Like, very sincere, like, I don't understand why you do it. And I'm almost a professional. Let's call me a professional poker player, but I don't really understand what you're doing. What is the advantage of it? You already have the advantage. They already have to act. All you're getting is that first bet is 5. All you do is kill the action. The first guy is so out of position, he's never calling you unless he's got aces or kings or queen or a big hand. He's out, and the big blind's out because they're out of position. They got to act first. I don't want to act first with the weak hand. I want to act first with the strong hand. Then it goes around. So now I have 8-9 of clubs. I'm not seeing $5 for 8-9 of clubs. In my mind, I'm at a 1-2 table. I want to see the flop for $2 and I hope I catch 8-9 of clubs. I hope I catch some clubs, 8s and 9s, maybe a 10 jack or a 6-7. That's what I'm hoping for in a flop. Well, why invest $5 in it? I want to invest $2 in it. The pots will still get big. You can still bet $100. After the flop, I can still make it 100. But before the flop, you're costing me 5. Well, I want to build the pot was part of his answer. I'm saying, what if I bet 20? Now you're priced in with 2-6 offsuit because you already bet 5? Is that what you're doing? Like, now you're committed with crap hands because you've got what you think is position, but position doesn't mean anything. Yes, it means you got the last look, but it's only meaningful if you have good cards. If I have a pair of kings, then position helps me. If I have a 2-9 and everybody checks, then I can raise and maybe everybody goes out unless they're playing possum, which you don't know. So again, if you don't have a hand, it doesn't matter your last hand. Okay, I'll bluff $15 because everybody checked, and that happened. Some guy bet check around. Guy bets 15. I call. Three other guys call. So three guys who have checked. He bets 15. Everybody called. So what does that tell you? Yeah, you're going to bluff, really? So again, he's building the pot. I says, but you're not building the pot. Most of the people do not want to play $5 are folding. You're only going to get good hands. If you don't straddle and you let the 1-2s, you let the twos in, now you're letting in weak hands. Now if you hit your hand, you're good. And if you're playing that I'm not going to hit a hand, then you're going to win your $5. You'll win $3. Big deal. Like there was hands I probably had like 9-10, or I think I even had 10-jack, but it was $5 to see it. It's not worth it. It's not worth $5 to get lucky, because I don't play by luck. I play by skill. I don't, oh, maybe I'll hit ace, king, queen and have jack 10 and I got it straight. Maybe I'll hit jack on the flop. I don't, that's only a moron plays poker like that. So that's my point about that. You don't play by luck, which is the whole lesson we're learning in this whole video. You buy gold because of the inflation. It dropped not because of skill. It dropped so JP Morgan could get out of the derivative market. There's no reason, nobody in their mind is selling gold. Nobody is getting out because they need the money, because I want to be in dollars, or I want to be in the 10-year treasury yield at 2% with heavily inflated 20% inflation dollars. I don't want to be there. I can see what happened to Sri Lanka. I can see what's happening to Japan. So would you sell your gold to buy Japanese yen because it's 135 now? Is that what you would do? I'm buying the dip on Japanese yen as they go bankrupt. Maybe I should buy the dip on the euro because they're down to 102. I'm sure that'll go back to 120. Oh, no, wait, they're inflating. They have heavy debt. It's probably going to go down further and further. That's the reality of what's going on. So that's what you have to have the skill and the knowledge to play. And so when you're playing poker, so the guy never really answered the question. All he said was, I want to build a pot. And my response was, you're not building a pot, you're killing the pot, because nobody's calling. When it got down to it, I tried to explain it like this. If there's 4 people in the pot, I want to play because I'm getting 4-1 odds. If it's me and you heads up, I'm getting even money. Or if there's just 2 of us in the pot, I'm only getting 2-1. I don't want to play 9-10. I'll play aces, kings, queens, ace, king, of course, and that's fine. But if I'm going to play 8-9 of diamonds, I want 4 people in the pot. Therefore, I'm getting 4-1 odds. I bet 10, I get 3 callers of 10. If I'm heads up with the guy who bet the $5 and I catch the straight and I bet 20, he folds. There's no money in the pot when you do that. You chase everybody out. The only people who are going to be in are people with high pairs or ace king, or even medium pair of sevens are going to see the flop for the $5. But if you get raised 20, if I get aces and make it 20, what are you going to do with your $5 straddle? You're going to call me because you've put in $5? You don't have a hand, you have position. I got aces, so I don't give a shit about your position, because aces are aces no matter what position you're in. I'm going to pound you. So that was my point. So he never could answer. He just said, I want to build a pot. And I said, you're not building a pot. You're actually reducing the pot, because the odds on 4 or 5 players throwing in $5 aren't good. And then he became smart ass and said, there was a hand. He said, well, I won't raise so you can see a flop cheaply. And I'm saying, no, I'm just seeing a pot smartly. I don't have a hand, but instead of folding it for 5, I'll see it for 2. And that's what I'm going to do. And therefore, I'm going to see the pot like that. And that's really the point of it. But I didn't like his mouth. Oh, you can see a pot cheaply. Well, you don't know anything about me. You don't know anything about. I want to see as many flops as I playing any hands. So therefore, if I do get a 9-10, I only want to see it for $2 because you slowly play your blinds. Just going around the table, there might be, I got 5, 6 of spades. I'll see the $2. So I missed the flop. So you're down $20, $30 just in the natural flow of the game. So I only want to put in $2 and I want to see the flop. Did I hit my flop? That's what the game's about, is hitting your flop. That's why aces are only good before the flop. Once the flop hits, aces aren't any good because a lot of people have been flop a flush, a straight, or two pair, or a set very easily. You have a pair of eights and 8 hits the flop. I got a set. You got aces. I win. And that happens a lot. So you've got to be careful with that. But again, you've got to have your explanations. You got to understand why you're doing things. Why are we buying gold and silver and not stocks? Because of inflation, gold and silver will go through the roof. What's happening today, I'm explaining, is not anything to do with the dollar strengthening, because it's not strengthening. It's strengthening against the yen and the euro. It's not getting stronger. There's still $10 trillion out there. That hasn't gone away. That's why there's inflation. They printed and printed and printed. And guess what? They got to print and print and print more. They're not going to lower their balance sheet, and they're not going to keep raising interest rates because the economy's already screwed with the debt, and they're not going to keep rate. They can raise them a little bit. So they probably will go to 3%, maybe 2.5%. They'll raise it the next couple of months. Then they're going to come out with some bullshit. Oh, inflation's down, which it's not. And we don't have to raise interest rates anymore. I mean, inflation's 20, you're stopping at 2, and they're going to give some bullshit. We don't need to. The economy's slowing down. We're going to lower interest rates now. That's what's going to happen. Give it a few more months of raising the rates like they're doing something, and then shit's going to hit the fan. Watch Japan first. 135 to the dollar. Okay, that's a huge red flag. There's big trouble. How are they going to get money for their debt? And let's face it, all these countries, it's the same thing. You print, and they're all in debt. All they can do is keep printing to get out of debt, but they can't keep printing because the more you print, the less it's worth. The debt's going up and up and up as you raise interest rates. Now you got to pay a higher interest rate on the debt, like a house. So you're buying a house, but you never buy a variable mortgage. Always buy a 30-year fixed. Never buy the 2-year variable at 2%, because that's always 100% going to go up to 3, 4, 5, 6, 7. And if you can only afford the 2%, you don't be buying a house. You can only buy the house with the 4%, 30-year fixed. Then you don't have to worry about it. Then you gain, because as the inflation happens, the value of the dollar drops. So now you pay them in inflated dollars. That's your advantage. This variable rate mortgage is not to your advantage, it's to your disadvantage. So don't do that. And that's really what led to margin call, and that's what's going on now. So as they raise interest rates, the debt goes up without the debt even going up. The interest rate on the debt goes up. So you can barely afford it now, but now if it goes from 4 to 6, you can't afford a mortgage at 6, or it goes to 8. You can't afford the house. You can't afford the $400,000 house at 8%. You could barely afford it at 2. That's the problem. People need money, will sell cheap. Again, it's the buy and the sell. You're going to have sellers of houses, but the buyers are going to be here. I can afford $200,000 at 8%, but my house is $400,000. Well, there's no JP Morgan to buy it. That's what's happening in the derivative market. JP Morgan's buying it, not the market. So they sell. You can't sell here. You can't sell here. You got to come all the way down to $200,000 to sell your house, which is why I say houses will go down in value. Now, what's happening with gold, the demand's here, but JP Morgan, the price is here. Well, what's JP Morgan doing? They're stepping in. I'm selling. They don't have real gold. And that's not the market. They're not the market. The market's up here at 5,000, 10,000. This is the market for gold, $10,000. But JP Morgan's selling under the market because they're not owning physical. So you have to understand the gold paper derivatives are down, not the physical. So we're holding the physical. And believe me, when people say, the Russians are wishing they could buy at this price, but they can't because it's not gold they're selling paper derivatives. So therefore, that's what's happening. Anyway, so I hope that helps you understand what's going on today. It'll still be 20, 30,000 an ounce for gold. It's just, we got to flush out JP Morgan. They're panicking. They're getting out like margin call did because they know the value of gold is going through the roof. And they have all these short derivatives, which is like an option that says gold's going to go up. Oh, I better get rid of mine because I'm going to lose $1 trillion. So they're selling exactly like margin call. Margin call sold the mortgage-backed securities because the houses were defaulting because they loaned money to people who couldn't afford houses or could only afford them at the variable rate of 2%. When the rate started going up because of the same crash, they couldn't afford it. They defaulted on it. Or people had bought 2 or 3 houses and defaulted on 2 or 3 of them and kept one. And that's basically what happens with JP Morgan now. And they own the Fed. They don't want competition with gold and silver. As long as they keep people ignorant, no offense, as long as they don't tell people what's going on, people won't jump on gold. This is the sale of the century, gold at this price. You'll never see it at this price again in about 6 months. Now, again, Howard, why isn't it 5,000 tomorrow? Well, it doesn't work like that, unfortunately. In my mind, in my world, in our world, in Teaserking world, it is 5,000 to 10,000 physical. This, in our world, is $50. If this was gold, it's 10,000. But because they're dealing in paper, they're dealing in this, it's 1,700. But in this, it's 10,000. Now we need the cross. And that's what the Russians are going to do for us because they're going to go, I want to buy it at 1,780. And they're going to say, we don't own any of it. It's just derivatives. And then they're going to give JP Morgan all they want. And eventually JP Morgan won't have any more derivatives to sell. They won't be able to keep the price down and COMEX will blow up because nobody else is going to want to buy derivatives, keeping the price down when the real price is much, much higher. So eventually it blows up, and this is the beginning. This is the panic. This is the margin call panic, and it's driven down to 7,000. There was a scene at the end, and the guy, I don't know who the redheaded guy with the accent, and he's talking to the guy from Merrill, and he says, well, I can sell them for 65 cents on the dollar. And he goes, I'm losing $100 million. And the guy says, sell it. That's what's happening. I'm going to lose, but he's like, just get rid of it. And that's what's happening now. I don't know why he had to call him. He knew he had to sell everything. So I don't know why he had to ask him. It was just amazing. Nobody at the firm knew what was going on. Like, dudes, you're finance people. This is your job. Mortgage-backed securities. What the hell? How stupid are you? And Jeremy Irons, you're like, how are you running a company that you know nothing about? You know the music stopped. The music stopped 5 years ago when they started loaning money out to people that couldn't afford it. What are you talking about? So it's just really incredible how stupid these people were now that you know what's going on. So it's the same thing now. They'll paint it as the dollar's stronger and the interest rates are going to go up. So let's make gold go down. That's just fairy tale. That's not why gold's down for one reason. JP Morgan trying to save their ass, getting out of the derivatives, selling it at whatever price they can get. That's all this is. The demand for gold is physical gold's up here. Just the Indians buying it for the wedding. The price is here, not at demand, which it should be. And then JP Morgan's lowering it, not letting it go to market. So like I said, this is $50. This is the demand, and the supply is 50. So this is the whiskeys right here. Gold. So in other words, what JP Morgan's doing is pushing the price down to $5 when the demand for Canadian Club's 50. And JP Morgan's playing derivatives $5. But since they don't own any of it, they don't have it. All they have is the derivative paper. I don't know who's buying it, but whoever, but you can't buy it at $5. You can't buy gold at $1,770. You got to pay $1,900. And I don't know where the dealers are getting it for cheap enough to sell it for $1,900. And I love the premium. Well, we know COMEX isn't right, so we have to add a premium. You don't even know what you're doing, because the premium you should be selling it at 10 grand. You should be selling it at market. Here's what you're buying it for. You've got all this, and you keep selling it here instead of up here. What the fuck are you doing? These dealers are so stupid. So who makes out? Me, Nick, you guys, anybody smart enough to realize gold's up here, the price is here. Now the question everybody asks is, will the price go up to the demand? Absolutely, it has to. As long as somebody's willing to pay that. I'll give you my last example. I go to the mall yesterday, 4th of July. You notice Nautica. Normally it's Polo. I go into the Polo store, $110. $110 is what they want. The market's down here. They're over market. Nobody's buying. Nobody in the store. I'm not buying. Well, it's 30% off. Okay, so it's $85. I'm down about the $40 range. That's all I want to spend on it. I have shirts, but I just want to refresh. So you're over market. Market's here. You're not going to sell. I'm saying you should put your resume out, because your company's no longer going to exist because you're over the market. Then I go into Nautica. Now the market's still here. Nautica has now got everything on sale for $20. This shirt's $20. Well, the market, I know, my market, I'm willing to spend $40. But I only have to spend $20. Not that you've lowered the market, but you've allowed the availability, aka gold. This is what I will pay for gold. This is what you're selling it at. So I bought 5 shirts instead of 1 at $20 because you're so far under market. Now if $29.30 would have been real close to market. Gold, $10,000, market $1,700. So gold is Nautica, $19.99, but I'm willing to spend $40, maybe $50 on a nice shirt. Okay. But up here is Polo at basically $110, selling it for $85. But you're over market. There's no differentiation between Nautica and Polo in my mind. There's used to be. Now, if they were both $20, I would have bought the Polo. That's where the differentiation comes in. But I'm not going to spend $60 more on Polo when I'm willing to spend about 40, maybe 45. That's what I would have spent at Polo been at market. It's a holiday, 4th of July, the discount, 30% off, and you're still starting at 110. Now the excuse I heard from the lady at Polo is, well, when I walk into the grocery store, I pay $200. So since I got to pay more at the grocery store, I should pay more at Polo. That's the stupidest excuse I've ever heard. Well, we're not a discount mall anymore. It says Bertrand Discount Mall. What are you talking about? I walked in here. Are you a discount store? Yeah. Everybody at the mall, it's a discount mall. Thank you. Only Polo doesn't have the idea that they're a discount or they don't need a discount. I'm not sure. That's why they're going out of business. If you own Polo stock, sell it immediately, because sales are dropping through the roof. There'll be nothing. If you own Nautica, I would own Nautica stock. They'll go through the roof because they're under market. But as long as they're making money on it, then all the sales are going to go to Nautica. So it's all price sensitive, which is what I try to explain to you. The price, the market dictates what you can sell it for. So if inflation's hit Polo and they want to sell it for 110, You're not making a sale, you're over market. But Nautica's smart enough to go, oh, we'll sell them for 20. Now they were 30, they might even be 50% off. They were, it was probably a $40 shirt for 20. Well, I see 20 after seeing 85 at Polo, and I bought gold, I bought a yellow, I bought a green, I bought a blue. I mean, it's like, okay, you know, I bought a sweatshirt for $17 that I didn't need, but it's a nice one. It was 17. I bought a pair of pants. It was 27. It was like Christmas. Everything under market at Nautica. They get the market. Polo doesn't. Ferrari has their own market. So if they want to, these people don't care what the price is. I want a Ferrari. Oh, it's 400 grand. Okay, I'll buy it. See, that's when there's really no, the demand is whatever to buy it. And that's pretty much what gold is getting to. I don't care what it costs. I need the ounce of gold because I can't hold the dollar. So once it hits that point, once it becomes Ferrari, so Ferrari sits there and they sell it. That's what you try to be, like you're on the gold standard or these really expensive Rolexes. It doesn't matter. I want to own a Rolex. Oh, it's 20,000 for a watch. Fine, it's a Rolex. I want to own it because it's a Rolex. I want to own it because it's a Ferrari. I want to own it because it's a specific type of boat. Not Polo. I don't want to own it because it's Polo. There's a price. Then it becomes price sensitive. So the Ferraris and the Rolexes can charge what they want. People will pay. That's where gold's headed. People don't understand gold, that they don't understand that the dollar's going to zero and you need to own gold at any price because that's freedom. And that's what's going to hold value and go up. People don't get that. I share that with you guys. You guys know, and I know, you won't pay anything for gold, but we might as well buy it for 1900 because we know the market's up here. We can buy it here. But once that dollar starts sliding and they realize the debt and interest rates won't go and nobody wants the dollar, 55 countries are off the dollar as the reserve currency. Once that falls and people will panic, the market will crash. You don't really buy, like nobody wants to buy gold. I'll buy real estate. I'll buy crypto. Well, crypto's down to 5,000. It's gonna bounce back. Why? Well, I don't know, but it will, because it was 60. It's gonna go back to 60. Why? I have no idea. What? That's like I'm gonna play 3-8 offsuit because I'm gonna probably flop 3-3-8 and probably flop a full house. Why? Well, just because. That's how stupid people are. So at the point where people realize, see, we know the dollar's going out. $5 a gallon gas is all the proof we need. We know it's going down and out. We understand that. We know the only escape is gold and silver. Or in Nick's case, the Burrow rookie card. In my case, the Mantle and the Brady rookie, or the Mantle card and the Brady rookies and the Montana and the Rice rookies. That's our out. That's how we get out of dollars. We'll survive it. We'll have money. Our gold and silver will go through the roof because what'll happen is as this drops, this becomes Ferrari. I don't care what it costs. I need gold and silver to survive. And that's when your Bill Gates and your other morons start realizing and they start selling their stocks, which crashes the market. I don't know what they do with their houses. Who's going to buy them? They start selling, and start buying gold. I don't care what the price is. I'm going to buy it at wherever it is because I understand the only way out of this is to buy gold and silver. They start buying gold and silver. So what'll happen is there'll be a lot more silver buyers because it's cheap, right? I tell my friends, well, I can't afford gold. No, go buy silver. It's $27, $30 an ounce. I know you got $30 on you. Go buy some silver. And the more silver, then it starts going up in price. Then, silver is like here and the price is here. So as silver goes up, silver eventually becomes Ferrari and it pushes gold to Ferrari. See, then they'll both be Ferraris. They'll both be, I need it. because I can't be in the dollar. There's nowhere to go. Euros crash, the yen's crash. The only dollar that's going to be there is the ruble and the yen and the Chinese, because they're going to be backed by gold, because they're smart enough to understand if I have gold in my currency, it's an asset. I need to peg my money to assets because my money's paper. They're the only ones who have figured it out. All the gold's gone east. Russia, China, India, Saudi Arabia with their oil money. It is no longer the petro dollar, it's the petro ruble. So when you bought gas before from Saudi Arabia, you had to pay them in US dollars. Now you got to pay them in rubles. Nobody wants the US dollars. It's worthless. It's going to go down. They can raise interest rate. At the rate they're rating, by the time they get to 3%, it's going to be too late. But just watch the yen. It's 135. So let's keep an eye on that. And that's what you'll know is coming here. I know a lot of people in Japan have bought gold. Why? Why did Putin buy gold? Why does the Chinese own 25,000 tons of it if it's such a bad investment? Why would they buy it? That's your out to answer anybody's question. We know the real answer because it's the Ferrari. It's the Ferrari in the room. We understand that you've got to get out of dollars. You can't buy a house. Interest rates are too high. You don't want to be in stock. Everything's too expensive. There's nowhere to go. You got to go to gold, silver, and baseball cards. And okay, I'll buy a mantle card, but you know what? I'd rather gold and silver. I can turn into money. It is money. And so I have it. And that's really it. That becomes the Ferrari and your gold then. And that's where we're headed. We're just not there yet. So people don't realize it's the Ferrari and people don't realize the dollar. I don't know what they think when they see oil at $5 a gallon. Like, okay, what's going on in your mind? What part of this are you not seeing that it's really the value of the dollar dropping? Oh, no. Well, Biden said it's because the Russian war, so the price of oil has gone up because of Putin. What's that got to do with anything? It's supply and demand. So if there's less supply of oil, the price goes up, but it's not less supply. We didn't buy oil from Russia anyway. And the price was already going up before the war. So that's not the answer. It's because of inflation. The dollar's worth less, so it takes more dollars to buy your oil. The shirts. So when I get a shirt for 19, I'm buying a ton of them because I know it's like $5 for a shirt. So anyway, that's what's happening. Please do not panic. It will recover by the end of the week, I guess. It's just JP Morgan selling off their derivatives and probably their friends, understanding JP Morgan's out. We got to get out. That's probably what happened in margin call after the Jeremy Irons firm sold. The other firms that bought from him started selling, and that's probably what happened. And that's what's going to happen this time. That's why you see gold dropping because all this selling, but it's not real. It's all paper. It's nobody. There's not one person on earth selling a gold coin unless they need the money because their interest rates just went up and they need something to pay the credit card or the mortgage. And so they're cashing in their gold. Nobody who has gold who doesn't need to sell it is selling it. Nobody. This is not anybody selling gold physical. It's all this paper. So lesson learned for today, www.teaserking.com. As always, the professor helping out my class and wanting you not to worry. I took today off as a holiday, just an extra day. So I'm fine. I'll probably talk to you this weekend. We'll go back to some baseball. Right now I'm looking at my football. I'm about halfway done. I got to Virginia Tech. I got through the AAC and most of the ACC. And I was very happy to see my Miami quarterback all set. Some new coaches. I like one team hired I think it was Virginia. Bronco Mendenhall retired. They brought in the offensive coordinator for Clemson. You're like, Why would you bring in him? What does he know about it? He doesn't know anything about it. So you do bet against the quarterbacks. You do bet against the coaches. You do bet on the quarterbacks and coaches. So good luck finding them. Well, that's what I'm here for. Anyway, do things professionally. Anything you do with finance, with money, playing poker, anything, golf, ask yourself, why am I doing it? What's the point? If you can do that, you'll be so far ahead of the gang. It's ridiculous. Why are you straddling? I want to get a bigger pot. Are you getting a bigger pot? Do you see a $60 pot because everybody had no problem with the $5? Or did you only get one or two callers because nobody's calling you unless they got, a good hand? But again, I'm very strategic. I want 3 or 4 people in the pot with me. Unless I get pocket aces, I don't mind 2 people. But if I got 8, 9, I want 4 people in the pot. I want to get 4-to-1 odds on my money. The more odds on my money, the better. So if I get the odds and I hit it, I can really win a big pot. But if you're chasing everybody out with $5, you're not. Where's your big pot and where's your odds? Maybe there's one other guy in at 5, so there's 3-to-1. I getting 2-to-1 on my money. Who cares? All right, everybody, www.teaserking.com. I hope you all had a good 4th of July. Any questions or comments, let me know. Nick, have a good day. The movie Margin Call is, I think they're all a bunch of idiots. And the more I watch it, I keep wondering, what was that guy? The guy who played Lex Luthor. What was he doing in the movie? What was Demi Moore doing in the movie? She calls the guy by his last name. That would never happen in business. You don't call a guy Robbins or whatever. You don't do that. So I always wonder what she's doing in finance movies when she's so bad at it. All right, everybody, www.teaserking.com. You get my email, send me emails, and I will talk to you soon. All right, good luck, everybody. Have a great day.